today's number is 3. That's the percentage lost by Nvidia in aftermarket trade as Wall Street digests the numbers. Were they good? Were they bad? Or are they plain just ugly? In today's video, we break down what exactly is ahead for Nvidia and why this could be such an important catalyst for the markets around the world. On top of that, what is Wall Street up to? For 2 weeks, we've been talking about rotation, and so far, that's exactly what they've been doing. But will it continue, and where does the smart money flow happen to go to next? Well, let's have a look at stocks, commodities, and cryptos to break down what they're doing, where they could be at, and of course, why you need to be looking at it. See you soon, guys. This is going to be a good one. Well, welcome back everybody to The Daily Show. My name's Thomas Atkinson, and in today's video, we'll be taking a look at everything that you need to know about markets right now, from the macro to the data to, of course, the dark pool liquidity of Wall Street. We'll kick things off with Nvidia, then we'll go through all of the rest of the stuff that you need to know as an investor and trader, but it really was about this announcement. And of course, we did expect Nvidia to beat or be in line with expectations, and it pretty much did exactly that, falling 3% in after-hours trade, just basically because this was the first time, as I wrote over on X, links in the comment down below if you want to follow us there, we saw a miss in the data centers. Actually, it's the first time since ChatGPT's launch. Now, I believe AMD recently had something like this happen, but the real story for me is going to be whether Nvidia can actually get into the China market. Now, you'll actually see the narrative from China is, oh, don't use the chips, don't do this. And I think it comes back to Steve Jobs' analogy. And if we think of China like honeybee, then it's small possibly in the short run, but it will pollinate half of the world's AI research and open source models into the future. It's very important that Nvidia does access this market. And of course, this will allow the overall hive to continue to thrive. If not, it may struggle long term, and that could be a big issue. Now, I always liked this when it came to developers. If you ever listen to one of Steve Jobs' old keynote speeches where he just kept saying developers 50 times over, man, I miss those speeches. Anyone else miss those? Put it in the comments down below if you miss those things. I used to watch every one of them. I used to love those things. But those events are long in the past. But what he used to say was he always used to say developers, 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 because he wanted everybody to learn about how easy it was to make apps. And of course, we've seen how great a success story having the App Store has been, and the iTunes ecosystem and everything else, to the actual overall brand of Apple. He truly was a revolutionary and a visionary when it came to that. Now, what about Nvidia's breakdown? Well, of course, data centers make a huge difference. Why? Well, it's pretty much everything. If we don't have data centers, revenue increasing, Nvidia's not doing so well. So it was good and the revenue was on target, but again, Wall Street came in with pretty high expectations. Some of them actually were well above the general consensus. So I think that's why we're down in after-hours trade. And it will really come back to whether we continue to see a fall in the semiconductor stocks, and maybe the dark pools are showing us this, and then maybe like a sideways pit, similar to what we've been talking about now for the last 2 weeks. Rotation, rotation, rotation. Now, I thought this was another interesting call. This is from Larry Tentarelli, who wrote for Reuters. And you can see here in the very short term, the stock is seeing some downside testing. They did not drastically exceed the consensus forecasts. And beyond the short-term volatility, Nvidia remains the benchmark artificial intelligence stock. And it's the most direct way to invest in the theme. Now, on top of this, you're also seeing a huge amount of exchange-traded funds that are obviously in Nvidia and pushing everybody's money that is in a lot of dollar cost averaging style strategies into the biggest stocks. So it's not like we're not going to see flows coming back into this, and we still are looking at this being the benchmark stock every earnings season. So don't think that Nvidia is over. It's just, of course, starting to show signs of slowdown of exponential growth. Now let's take a look at the outlook for the third quarter, and you can see here that revenue is expected to be $54 billion, plus or minus 2%, and they have not assumed any H20 shipments to China in their outlook. So I think that's an important kind of factor here. You can read the rest of the notes if you're interested in the screen, pausing right now. But the big stuff that was going on behind closed doors were a couple of trades. A monster coming out for Semiconductors, SMH, which is one of the biggest exchange traded funds. And of course, this happened a little while ago, right around the same points that we find ourselves at today. Now, in the previous video, we talked about how Nvidia got quite a few transactions on it in the previous session. Then we've seen Oracle as well. And we also saw TSM, which is, of course, a massive semiconductor stock, also finding some big transactions ahead of the announcement. So the next 24 hours may tell us a little bit about whether Wall Street really is dumping these particular stocks and doing further rotation, or whether they're just like, you know what, doesn't matter. We still want to buy these stocks at these valuations. Who really cares? Trends up. Let's go, baby. Well, I'm not sure which one it is yet, but if I had to guess, I'd say they're rotating pretty heavily. So then the question is smart money. Where are the biggest traders in the world? Now, most people say they fade hedge funds and what hedge funds do. And in some ways, you can kind of see why. In fact, according to Goldman Sachs' latest investment report, it shows here that information technology stocks are their least loved, and most of the hedge funds are loving healthcare and industrials. Now, I'm not usually a fan of industrials too much, but it's interesting to see that the materials and energy sector are also in these loved areas. And a lot of these have started firing, especially over the last 2 weeks. So will they be proven right here? It ultimately comes back down to the flow and to the structure. And a lot of this actually has to do with what the Federal Reserve is doing. Now, unless you've been living under a rock, you're probably aware by now that during the Jackson Hole speech, Jerome Powell basically signaled a September cut. And that has kicked off this type of structure once again. Remember, when the Fed pauses for a long period of time, then begins a new cutting cycle, we go back to start this type of structure. Will we go into a non-recessionary rally, or are we going to go into a recessionary style overall structure? Well, a lot of that may come back to which sectors lead. So remember, if large caps absolutely smash it over the next 6 months, or maybe 3 to 6 months, that's a great sign that we're not going into recession anytime soon. But if we get what a lot of people expect, which is small caps, mid caps doing better, then that actually may not be as good as you think for the long-term health of this bull market. On average, a bull market lasts about 4 years, and you could arguably say that we started it in 2022. So therefore, 26 becomes a very interesting point indeed. Here's the term structure in terms of how the S&P 500 median performance looks after a Fed rate cut. And you can see also that when you've got this type of rotation that's been going on in the Qs, that is the NASDAQ finding weakness like it has, in fact, 6-day losing streaks have just happened recently. The next kind of 2-week period can be a little bit shaky, but overall, again, when you have these massive loss streaks in a row, such as rotation, it's not exactly bad for a 3-month return. And this really feeds into that idea that the market is likely in a pit during Q3, which is a pullback in time, while the street says, you know what, we're going to go start playing catch up on value, catch up on maybe healthcare, on energy, on sectors that have done nothing for 2 to 3 years. Now, in pre-Labor Day, we generally see upside on the S&P. So far this week, that has been what we've seen, a slight uptick in the S&P. Post-Labor Day can start weakness. A lot of you guys are going to be seeing videos and statistics, including on this channel, where we bring up how September is like the worst month of the year to be in the markets. But yeah, it usually is. It doesn't mean it always has to happen. But in post-election years, usually the markets look something like this. So again, we're not really expecting absolute knockout performance by the S&P, especially if Nvidia and the other semiconductors don't continue to bull heavily. So semiconductors in particular, you'll want to be watching these breaks, because if we don't get Nvidia above 185, it's going to be very difficult for the S&P to really find a ton of performance. Now, why could that be? Well, it's got to do with the speed and the velocity of the current rally. We've moved up to generally what all-sway breadth thrusts do, which is one of the best breadth thrusts in the market. And that is, we've gained around like kind of 18, 19% on the S&P. Now, when we get to these levels similar to the past, we start to become slow. And that doesn't mean that the market is going bad. It just generally means that rotation is occurring underneath the hood. And that's what we've been talking about now for 2 weeks. And we've been starting to see it happening on the street. So where could that rotation be going? Are we about to see something that's done nothing since April, being gold, find some buyers? Well, the biggest trade ever came through. And you can see here, it's a huge dark pool. And if you notice on the charts, when you look at gold, which we'll do soon, it looks like a symmetrical triangle or a pennant style pattern if you consider the current bull run. So that means that the market's been coiling. It was the most traded trade of the year, most crowded, and now it's probably down crowded itself to maybe the 5th or 6th most traded. So that opens up a new potential for a large move. It's kind of like with oil. Oil was super hated recently, and it actually now has the least bullish bets for 17 years on it. All of a sudden, a few days ago, what do we start to see? A little bit of an uptick in oil, a little bit of an uptick in energy stocks. Finally, how these types of things start to look better on structure when this type of thing occurs. It's the same kind of thing for also crypto at the moment. Now, we'll do another special on crypto into our weekend show, so stay tuned for that. But so far, we've been seeing weakness in Bitcoin. And it just so happens that that generally does happen in halving cycles, followed by usually a rally. During this particular weakness in Bitcoin, we generally see some of the large alts hold up, if not even improve. We're seeing that in Solana, Ethereum, and others recently. And then after, if Bitcoin does rally, we generally see alt season. Now, I think it's important to note that alt season statistically doesn't hold for long. It's like 30 to 40 days. Yeah, not long at all for an alt season when it does start. So if we do end up getting a crypto alt season, guys, remember, it's not usually very long. This could be different, but at least the stats do show that. Now let's jump into the charts and have a look at the gamma as well. S&P 500 is going up, but how's it doing it? Well, it's doing it with a lot of stocks because, of course, breadth has been improving as the market goes into some of these smaller stocks. And you can see here that there's a series of higher highs and higher lows. In terms of the update here on the actual market itself, in terms of futures, here are the options high and lows. And of course, we're pressuring in on that resistance. You can see here the long leg doji candle. You can also see that we haven't closed above this price just yet. So potentially today, if it does go bullish, could push more positive gamma. We get through 6,500. If we do that, then of course the next stop you'd have to think is 66. So, pretty much every 100 points matters a lot, and it really just comes back to options. Let's take a look at the options now. 6,500 is the gamma wall. You guys can see that. And then we've got so many calls at different levels, 66, 67, and 68 in the future. So the bulls are in control of the S&P at this stage. Tesla is something similar. We talked about 350 being a call wall, struggling around there a little bit. We get a nice convincing break above 350, 380, 400 becomes the next level. And now after Nvidia earnings, you can see here all the calls that were sitting at above 185. Well, they may not be making so much money. We'll see whether the market wants to bid it anyway. But 170 is the put wall. So we're still trading in that range that you'll see on the chart soon, between 185, 170. And when we get a break either way, it's probably going to be decision made. So maybe if Nvidia loses 170, that's a sign that actually the market is weakening and we're going to get that potential September seasonality of selling off in the markets. Now, guys, if you've been watching the channel for a little while, you would know that we've been sponsored by Tiger Brokers for quite some time. And the reason is pretty simple, because they keep winning awards and keep listening to your feedback. Take a look at this. They've got 4 big ones now, and that's pretty awesome. Now, if you're a viewer of the FX Evolution channel, the good news for you is you may be eligible to potentially get extra specials from Tiger Brokers. They offer a whole bunch of specials if you fund an account, especially for the Australians out there, with $2,000. And you can see here that there are some extra ones that we've managed to organize for you guys. So check out the links in the description down below. But I want to mention one of the things I like about Tiger Brokers, and it really has to do with 2025 and the way you've got to trade markets out there. Especially if you're international, it's really difficult sometimes to trade the US markets. Why? Because they're closed, especially when you're from, Crocodile Dundee territory. Because realistically, guys, you know what happens. We're sleeping, market opens, market closes, and you don't even know what goes on. So luckily, you can access 9,500 stocks and ETFs, and it all comes generally with some extra hours. So that's particularly good in earnings season. And of course, it gives you the opportunity to potentially look for your favorite stocks. They're always improving the app as well. And of course, it does now come with an AI investing companion. So what are you waiting for? Check them out if they're right for you, and look at the links in the description down below and pin comment for the specials. All right, let's now jump on in to what's going on in the lead indicators. So the big thing here is always about, are we seeing a movement, a momentum? Are we seeing the beginning of a huge rally? So for a long time, we talked about how the Mag 7 and these stocks were doing very nicely. Now, these were the leaders, and then everyone in retail finds out about them, and then suddenly they become laggards. And I'm not saying they're bad stocks. Of course, they're awesome stocks, but this does tend to occur. So what we're looking for right now is pretty much these to continue to do this doji sideways action, for us to see more interest in RSP, more interest to see in value funds, which you can see here have done better than the other sections of the market in the last couple of days. And of course, more interest in small caps. And that's exactly what's happened. We actually hit 0.365 over the last 25 hours, which, as you guys know, is the first step, or I guess you would say second, because we already saw the first step, but we'll go with the first major step here of an improvement in a sector that has been, frankly, horrible. Now, it could turn out that we don't actually want small caps to do very well based on long-term averages and how it works, but there's going to be quite a few key points coming up here for the Russell. You can see this downward trend line, and you can also see that when you get these basement structures, it can start a bit of a rally in the Russell. It's been short-lived in recent years. It's been a way worse investment than large caps, but it does look like Wall Street is poking in and starting to play the game. And this is driven a lot by really risk on and this idea of new banking. So AI style banking and all sorts of things. We all know how that's going to end. But at the moment, if banking's up, then generally the market is pretty healthy. So you cannot say that this is bad. Even if you're feeling bearish on the market, you might be right in the macro long term. At this stage, the issue is that, yeah, the banks are up, and that's not usually a bearish sign. Equal weight technology sector still holding true, as you can see here. No break of that one, certainly worthwhile watching. And the US dollar continues to just chill within a very tight range, not being able to break through this high and not being able to break through this low. So it's really just stuck in a range. Now, what's that allowing us to see? Well, we're seeing copper breaking out, lithium's breaking up, iron ore's doing pretty well. These catch-up metals that have been behind are starting to do a lot better. But we're also possibly seeing the beginning here of maybe another gold run. I'd love to see it. I'm a bit of a fan, but at the same time, we have to go with the technicals. That is the worst line you've ever seen drawn. This is on a map. Oh my god, it's getting worse, guys. Anyway, we're not going to do that. But what we will say is 34.50 is a key level, and of course 33.75. That's also key. So we've seen a break above that already. We like it. Of course, it's an initial kind of, all right, it's in the direction of trend, kind of good thing. This is basically asymmetrical. So you can see here, you've got this very tight coiling range. And when something's sat for a long time, it builds up power. It's like a coiled spring. So just remember, there can be explosive moves. We're looking for it. You haven't seen full activation yet, but if you take the length, you're actually getting above 4,000 if it's going to do the pattern anyway. Silver also rebounded last 24 hours. You can see the candle here, which is that beautiful hammer. That's looking not too bad at all. So at this stage, still bullish on silver, still bullish on gold. You guys know my opinion on that. Now, what about oil? Well, UK oil is down a little here at the time of this recording, but it was improving. You can see here US oil also kind of, just sitting around that level. We did see the buy up. We're now seeing a bit of consolidation. Possibly a break above 64.22 could be better in terms of structure. But what I've been really looking at is energy stocks, which have been up the last 24 hours, having one of their better days, and pressuring the resistance. So they're really pressuring this level here. And if they do get through this, next stop you got to think is about 94 for energy stocks. And again, they're starting to see that rotation. And we started to see that a few days ago. On to other stocks, the likes of the Tesla, the Google, and the Apple have been playing catch up because they've been the behind Mag 7 stocks. But I think the last 24 hours obviously was all about this one here, which is Nvidia. And it's just trapped between 185 and 170. Now, it'll be down about 3% as of if it keeps holding that down, which is going to give you about 176. So you're just going to be in the bottom or the middle of the range between these two areas. So remember, the trend still remains intact. It wasn't a shocking earnings by any phase, but it just depends on what the street wants to do it with the narrative. So it's always going to be about narratives when it comes to these types of things. What about Chinese market? Dropped off a little bit after epic run, so the volatility is back in the Chinese market. I'll just show you here the drop, which is about 2.35. So, probably things like the daily 20 moving average, which is this red line, those types of levels are going to be worth watching. The trend still remains intact, and obviously it's been doing okay. Now let's jump on over to Tesla for a second. So with Tesla, we first started to see improvements of this with the break of this downward trend line. So I'll just show you that here. It's not, should have been saved, but anyway, it's not for some reason. And you can see that we've then taken a more key level here, which is the 350. So we're putting pressure on the 350, and yeah, that's the main thing that we're looking at here in terms of the key zone. So 350 plus close, 380, 400 are the next kind of targets. US 2K, it's doing exactly what you would expect it to do. So nice rally up here, looking for 2440, which is that all-time high style zone. So yeah, makes sense for it to be rallying. And NASDAQ is pretty weak. I mean, it's actually not been excellent in the NASDAQ. Now, that doesn't mean that the next 3 months isn't going to be good. You saw the stats before, quite bullish actually, but it has slowed down, and that's that rotation coming through. Ethereum, Solana, I'll just show you Solana, guys, so you can see another coin. You can see here Solana looking a lot better in terms of bullish flow. Maybe it plays catch up to Ethereum soon. But yeah, certainly these are doing better than Bitcoin itself. And if you take a look at Bitcoin, still struggling around the 112, putting pressure back on the upside. Could this be the low? It could be, but the other key levels are going to be between 104, 106, and underneath 98. I'd actually almost rather see a 98 than rally, because that makes sense to all the other bull or bear trap style situations that then rally on and hit those hopefully December peaks. For the rest of the week, guys, really the story is going to be, how does Wall Street digest these numbers? What kind of flows do we start seeing come through? And obviously keeping that risk management in mind. If you enjoyed today's video, then please remember to subscribe, and also remember to check out Tiger Brokers, the sponsor of today's video, if you're interested in their special offers. Links in the pinned comment and description down below. Thank you so much for watching. We'll see you in the next one. Bye for now.